You're welcome tonight. You're welcome. So as usual, we're gonna be taking the next 2 to 3 minutes while you share this and invite those who need to be part of this call or this section tonight. Okay, so go ahead and join so we can commence right away. Okay, so I welcome you to this call tonight. You're welcome, guys. And ensure that as you're coming in, you like, you share this tutorial tonight. You're welcome. You are all welcome. And if you're coming in and you can hear me clearly, if I'm audible enough, just either drop a thumbs up right at the comment section below. Okay. And ensure you share this with others. All right. So go ahead. We have just 1 more minute left. Share this with others and let those who need to be part of this call join right now. All right. And as you're coming in, if you can hear me, just type yes, I can hear, or just drop a thumbs up right at the comment section below so we can commence right away. Please just drop a comment, drop the feedback. Let me know we are all hearing me clearly before we proceed further. If I'm audible enough, just drop a thumbs up, or you can say yes, can hear. All right, so while we wait for the okay, yes, I can hear you. All right, you're welcome. So I'm gonna go straight right now since we already have a feedback. And once again, I welcome each and every one of you to the call tonight, as to this section tonight. And I believe you're gonna be getting something very tangible from this particular section. And this one was one of the ones that actually got the highest vote from from the poll that was posted on our academic channel on WhatsApp. And that was what necessitated all these series we started a few weeks ago. So tonight we are looking at how to trade the forex market as a financial market, and we are looking at this particular course even being able to help someone that is coming in newly to the forex market space entirely. So if you're coming right here right now and you really don't know anything about the financial market, this particular tutorial is actually for you. For you, if you're just starting off, for you, if you've been in before and you want to be profitable, and for you, if probably you've gotten some form of knowledge before and you have been making one or two mistakes, and for you, if you really want to get more knowledge, because learning is never enough. So, our objectives for this particular lesson tonight, and this one is part one, okay? The reason why we can't do every single thing is because every single thing at once is because it is actually not possible. All right. In fact, it is even not possible to concise this, that is, to sum this up in two sections. It's actually not possible. But I'm just looking for a way so that this won't be more than two sections. Every other session could be question and answering, and we can be looking at it based on feedbacks from people that, okay, I got to understand what you shared before, but when I started the trading or when I started um, either learning on demo, I'm having some issues. So every other subsequent session will be coming from such feedbacks or questions. All right. So if you're still coming in right now and you can hear us, just type yes at the comment section below and do well to give this live session a thumbs up. Right. So you're welcome. I can see you all. You're welcome to Chuku. You're welcome. Joshua, you're welcome. Mubarak, you're welcome. Joshua, you're all welcome, guys. So as I said once again, even if you're starting off your journey for the first time, this section is very important for you. And for those who are not live right now, just do well to share that with them. Or if you're experiencing network issues, After the end of this session, the video will be saved automatically, and I'll also be dropping a link right at the comment section um, below as well, and even on our WhatsApp and Telegram channel. This will also be posted. So, what is our objectives briefly? The first one is to understand what is FX as that's forex, which is most of the time abbreviated as FX. Understanding some key concepts. Then the third thing we are doing is to understand how to trade. The next thing we are looking out to is to getting to know some of the beginners tips. Since we say we want to help even those who are coming in newly to the financial market, we also need to look at some of these tips in this particular section. The next thing is to understand some of the popular trading strategies you have out there. And the last thing we'll be looking at tonight, if possible, is getting started and some practicals like the account setup and so on. All right. So you're welcome once again, guys. And show that as you're watching, share this with others and let those who need to join us live join us. And in case you have any question, do all to type that so that once we round off with this section, you can be able to drop that right at the comment section um, below. So what is FX trading? In a very simple term, it is actually foreign exchange. And this is a trading that involves the buying and selling of currencies on the global market. And it is actually the largest and the most liquid financial market with a daily trading volume of over 6 trillion. So this is actually far bigger than the crypto market put together in terms of daily volume. Now, when we say at least 6 trillion, even more, some days it could be even 7, 8, 9 trillion. Sometimes in a whole month, the daily financial volume in the forex market could be even up to 500 trillion and above. So this is a very big um, market, and we all need to take advantage of it because we need multiple streams, right? So what are actually the major types of FX trading? I'm going to be brushing through the objectives so we can go straight to the practicals as soon as possible because of our time, all right? So in foreign exchange, which is the FX market, there are several major types or styles of trading depending on certain factors like time horizon, strategy, the approach, and here's just a little breakdown of the first thing, which is understanding the financial market by the trading style. And if you are saying trading style, we are considering this using the time frame. I believe some of you have heard of scalpers before. So things like scalping is actually what you can find under the trading style, which is under the time frame, right? So you have scalping, you have the day trading, and you have the swing trading. You also have the position trading. And for instance, the scalping is simply when you decide to go into the market, you either buy or sell because in forex market, you actually make money by prediction. You predict whether the market is going up is different from the crypto spot trading that we explained few weeks ago, right? In spot trading, for instance, you buy, you hold the coin for it to go up, and when it goes up, you make your profit and you sell. But in this case, you can either make money by either buying or selling. You can't make any money in crypto when you are selling, especially if it is on spot. I'm not talking of future trading because even future trading is an aspect of forex itself as well. So in forex market, you can actually make money by buying and also by selling, but it is strictly by prediction. You predict correctly, you win. You predict wrongly, you use. What is going to aid you in predicting correctly? We'll be coming to that shortly as well, right? So now we said in terms of trading style, which is by time frame, you have things like scalping. And scalping is simply when you enter the market, whether you buy or sell, and you hold your position for some seconds or minutes. So your major focus or target when you are scalping is simply on small profits. There was a particular video that I posted recently where someone was actually doing scalping and the person was actually able to build wealth from that. I think the guy should be from China, one of these countries. So the next style in trading is day trading, or what some people refer to as day traders. So when you buy or sell and you're closing your positions within a trading day, no overnight holds, you're not holding a trade overnight. You just buy today, you still sell. Probably you hold for a few hours and then you decide to sell. So you're simply a day trader. But then if we come to swing trading, it is simply holding positions or trades for days or weeks. And the major target of this is you're aiming to profit from market swings, right? So in this one, you can start to hold the trade longer than usual for several days or even weeks. And for the position trading, is actually holding the position for weeks, months, or even longer than that. And your major targets in that position trading is simply for long-term purpose, right? So the next thing we're going to be looking at is some of the few trading methods or approaches we have. And this describes the analytical or the strategic methods we use in trading. If you remember, I think last section we talked about, I think last two sessions or last one, where we talked about technical trading, fundamental trading, or analysis, and then sentimental or sentiment analysis. So this is exactly where this actually comes in, especially when we come into the forex market. The same thing that applies even in the crypto space also applies in the FX market. So in terms of this, you have the first one, which is technical trading. I've already explained that before, but in summary, in this case, you make use of charts, indicators. I believe you've seen, if you go to YouTube right now, you have several good, bad, ugly, all forms of indicators right there. Mark D, that's moving averages, relative strength index. These are all part of approaching the market using technical form. And in this case, you are focusing on price action and historical data. You read the chart, top down analysis. I think we'll come to that briefly if we are able to do that in this particular section. All right. But if you're not able to look at that in this session in detail, then we'll do the practical in our next section. But we'll start with the practical right in this section. Now, the second one in the approach or the method is simply fundamental trading approach. And in this one, you are taking your trades based on economic data, the interest rate, GDP, inflation, the employment, and all those data. You check the fundamentals behind the project. That's where you talk about the use cases. Such things also apply in the forex market. So these are just general understanding that you all need to know, even though we'll narrow it down to a particular aspect once we go forward, right? So in this one, you're focusing on long-term trends and macro events. In fundamental analysis, you also have the news, right? So the third one is a sentimental trading or sentiment trading. And this one uses market emotions, that's sentiment, indicators, positioning reports like social media, news, and the rest. You check the chart, you check the blockchain, and then You analyze that using emotion. Okay, in crypto, I think I gave an example of that using fear and greed index. So that's a form of sentimental analysis. So if you're still following us, can you just drop a thumbs up right at the comment section below? And the next thing we have right here is automated trading. I believe you've heard of trading bots, all those stuff like that. Many of you may have actually been crashed, like some of us we've been dealt with some of these automated trading methods in time past. All right. So, what are some of the other things? If you're still following us, can you just drop thumbs up right at the comment section below? Let's know you're still with us. All right. So, what are some of the things you need to take note of? The first thing you need to take note of are the major pairs that we trade in the financial market in general. We have the major pairs, we have the minor pairs, and we also have the exotic pairs. The major pairs, like the ones that are widely traded and involve major economies, those ones have high trading volumes. Yes, I can see the thumbs up. Thank you, guys. I can see the feedback right at the comment section below. Thank you, guys. Now, the major pairs are simply some things like you have the Euro USD, the Euro, that's the US dollars. So these ones involves high trading volume and they are widely traded. It involves major economies. And under the minor pairs or crosses, it involves major currencies, but with USD, usually they have moderate liquidity. And for example, you have the Euro British pound. And the last one you have right here is the exotic pairs. And this one involves emerging market or less common currencies like the euro and the South African rand and so on and so forth, right? These ones are not a target, and that's why I'm trying to rush to where we can actually base, where we can actually get something much more valuable, right? So, what are some of the major asset types we have in the forex market? This is actually divided into three major. There are many actually, all right, but this one is three major ones. We have the currency, we have the commodity, and we have the synthetic. Now, for the currency, you have an example like Euro USD, JPB, and JPY, and the rest. For the commodity, you have like gold, you have like oil, and so on. And for the synthetic, you have like volatility, you have like boom, you have crash, and other pairs like that. For example, when you're looking at this currency, for an example, or commodity, you can trade that on literally many using. I think we're going to come to that shortly. So probably let me wait till then. All right. But let's talk about this last one because that's what we're going to be focusing more on. Okay. And I have a reason why I'm focusing more on the synthetic market. And you'll get to know the reason more with time. And one of the major reasons that I'm going to be chipping in as time goes on is the fact that currency and commodity are easily affected by news. In fact, all these sentimental analysis, fundamental analysis, and all those stuffs, they are not really necessary when you come down to synthetic market. The only thing you need more for synthetic market are simply technical analysis and sentiment, but not really sentiment per se. And you also get to understand that as we go forward. So I choose synthetic more because it is not controlled at all by news. News doesn't control synthetic market. So which simply means that you can actually be in a trade and you won't be afraid of probably suddenly a news coming up and just crashing your account, just as you saw that recently when the market crashed in the crypto, some other commodity crashed, some other currency crashed, but gold was the only one that kept on pumping. Now, how about some persons who decided to sell gold after they've checked technical analysis and at least they thought, okay, based on technical analysis or based on sentiment analysis, gold was going to drop. And suddenly a fundamental news just came up and then gold kept on pumping terribly. Many accounts were wiped off and you could, I believe you should have been hearing of some gold crash that you had in time past, how people will be losing $100,000, millions, and so on. So this currency and commodity, they are easily controlled by news, whereas this synthetic is hardly, in fact, the news doesn't even control anything synthetic. And I'm going to be telling you the best approach for the synthetic market as well when we come right to how to trade that. Right now, how do you trade? So the first step in trading is you choose a broker depending on what you want to trade. In fact, right now, if you're making use of brokers like Deriv, I'll be dropping the link right at the comment section below, or you can just check that right in our Telegram channel. I'll be dropping that right at this at the end of this video. Okay, so you'll get an account with Deriv because Deriv on a single platform, that is on a single MT5, you're making use of MT5. I'm going to show you the app as well on Play Store, the app you need if you want to trade and if you want your journey to be much easier. All right. Because once you understand one, it is easier for you to understand the others. So if you're choosing a broker, you can choose a broker like Deriv because that is actually one of the major brokers that trades synthetic like Boom and Crash. We also have a new broker, which is Well Trade. And Well Trade is doing very well. And one of the things World Trade is doing right now that gives them leverage over Deriv is the ability to copy trades of master traders or of professionals. So you can also join World Trade as well. I'm going to be leaving the link right at the comment section um, as well, right? So the next one is you understand leverage. That's the use of your lot size and the rest. You understand because that actually either amplifies your losses or profits. All right. So the next one is to develop your strategy. It is not all strategies that will work for you. The one I'm going to be showing you at the course of this video is only to guide you. In fact, every single thing I'm doing is just to provide a guide. You are the one that will, from what I've shared with you, go to the market and practice, right? And you start practicing using a demo account. And I will show you how to create a demo account as well. Okay. So you go ahead and create that account and use that to practice. So once you practice very well using the strategy that I'm going to be showing you or some of them on your own, you will know and be able to decide on which one works best for you. All right. So you stick with only the strategy that works for you and that is consistent. Any strategy that is not consistent over the last 6, 7 months is not really worth it. And the reason why is because you can be making something small, 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 and suddenly you use that same strategy for another thing and eventually gets your account cleaned off. So the next thing you have to do is to analyze. That's number four. You analyze the market. You use technical, fundamental, and synthetic and sentiment analysis. But you won't be needing this for synthetic trading, which is trading like boom, crash, volatility, and also dump and the rest that you have on Deriv and also on Well Trade Broker. So you won't be needing this no matter what, no matter how. This is actually not reasonable, all right? But you can just make use of technical analysis a little, just a little, okay? And I'll show you that as time goes on at the course of these lessons. The next thing is to manage your risk. And this is the one of the most important thing you need to note. You must manage your risk and be very patient at managing your risk. You set stop loss where necessary, you position your size, and you check your risk reward ratio. For instance, if you enter a trade, for instance, you can say, okay, this particular trade where I am entering the trade from is a good position. I can decide to make depending on your capital. If you have a smaller capital, you can say, okay, I can decide to make just $1, $2 from this trade. And depending on your weekly profit target, because it is right under this risk management that you can start talking about the kind of lot size you use, and also, and I'm going to explain what lot size is with time. Right now, it is where you actually get to understand the kind of lot size you use, the kind of um the kind of lot size you use, the kind of losses you should take, and your ratio in terms of, okay, if I enter a very good market, I can decide, okay, let me make $2, $3 from this. If my capital is small, or if my capital is much, I can say, okay, let me make up to $5, $10 from this, and I'll be good, depending on your lot size as well. And if you're trading the synthetic, which I'm going to be showing us with time, it is less risky in the sense that you can actually manipulate your trades. For instance, I'm just going to give this as a general example, right? If you're trading um, gold, gold is a commodity. In fact, many currency, many commodity, their minimum lot size is mostly 0.01. Now, if you're trading gold with 0.01 and the market goes up against you, or no, if you're trading gold, the minimum lot size is 0.01, and you all know how the chart, how volatile gold is, and how you can get wiped off of your capital if the market goes up against you. So many a times this is very deadly, and you can't manipulate this lot size and reduce it. That's one funny thing with this. But if you're trading synthetic, for instance, the minimum lot size in synthetic is 0.2. That's for boom, for crash, and for boom 300 that has one lot size. You can always manipulate all of them to 0.01. That's the least. But remember, the normal lot size for gold is what? 0.01, and it's very dangerous because this could crash your account, your $100, $200 account in few seconds or minutes, as the case may be, if the market is against you. But in the synthetic, using even 0.2, it will be more difficult to crash your account. And remember, this 0.2 is the least lot size for synthetic. And even this list can be manipulated, that is, it can be reduced while the trade is going on to 0.01. I'm going to come to that and show us how that works as time goes on as well. I just needed to say all that while explaining this how to manage your risk. If your capital is probably like $10, you shouldn't risk more than $1. That is, if you lose more than $1, just ensure you short. That is like 10%, which is reasonable enough. So you just shut down that particular trade. If it is against you, if the market goes up against you more than $1, just short it. That's like risking 10% of your capital. That is, if your capital is $10, okay. If your capital is $20, 10% of that I think should be $2. All right. So you shouldn't lose risk more than $2. So that is you trying to balance your risk to reward ratio. And when you are in a profit as well, you can also manipulate your trade and reduce the lot size to probably 0.05 or 0.01. That is if you're trading synthetic. All right. So let's just proceed further because of our time. Okay. So the next thing we are going to be considering is some of the beginners tips that are very essential. And this is very important, right? So you're to start with a demo account. A demo account is simply a virtual money that the broker gives to you to practice in the market. If you're making losses in your demo, definitely when you fund with your real money, you will lose the money. So that is why you first master the act and how to trade very well, how to be profitable on demo before you even say you're going live. All right. The second one is learn the basics, and that's the essence of these lessons that we have right here. Understand some of these simple basics. Then you need to actually stay informed. Don't just say because I've known something, then I'm gonna jump. I think I've seen some persons after just introductory lessons like this, they just jump into real account. Some of them just practice on demo one day and they feel they are masters. So that is actually not wise enough. So you need to stay informed. If not, you're gonna have to pay heavily. And the next one is to be patient. And it's in this patience that you need to actually understand the major secret of a successful trader. The major secret is simply patience. In fact, in terms of I think, and I could say clearly that up to 80 to 90% of your win rate in the financial market will be based on your patience. Imagine if you were patient enough and you watched um, gold rise to that crazy all-time high. If you decide to sell just as you saw, I don't know if I showed us that on our academic group, it actually fell massively, lost up to I think 100, 200, 300 pips down after rising to all-time high. So that's exactly how this is. If you're patient enough, one or two trades in a whole month self could actually settle you in this financial market. That's actually how this is. If you're patient enough and you are able, because your patience is what the market is going to test. And one of the things that actually sponsors impatience is if you don't have multiple stream of income, which is one of the things I encourage if you're coming into the forex market. Ensure you are not greedy and ensure that you have another source of income. And the reason is because if you don't have another source of income, you will set unreasonable target for yourself because we discussed managing risk just few seconds or few minutes ago. So if you're not patient or if you set unreasonable risk, like you're trading with maybe capital like $50 and you're saying your daily, I've seen someone saying his daily target is 10%. Saying your daily target is 10% is not wise and it's not even reasonable at all. Now, if you have to say 10% of $50, that's 0.1 times 50. That's like saying $5 every single day. And that's not reasonable. It's naturally not wise. Can you make up to $5 every day? Yes, it's 100% possible, but it is also very risky if you make this a daily target because this could actually make you end up losing your money. So the best in terms of risk management and being patient is ensure you have a stream of income And when setting your weekly target, you can be setting something like 10% weekly. It will help you to be more patient because the kind of target you set for yourself is actually what triggers unnecessary emotions for impatience. If you set high target and probably you're coming to the end of the week, you set like 50% profit target in the week, and this is Friday or Saturday, and you haven't gotten that, you become tensed, and before you know it, you go and make an entry when you're not even when even your own strategy says wait. You refuse to be patient and wait. You enter the market, you blow off the account, and then you start afresh again. So if you don't really want that to happen to you, if you don't want to learn the hard way, then you need to be patient. And one thing you need to note is this: the forex market is not like the Nigerian economy, whereby the government breaks the law and walks away free with it without even having a scratch on its soil body. In this case, no matter how professional you claim, if you're indisciplined and you don't, you're not patient enough, you decide to do what you want to do, definitely you're going to get burnt, irrespective of the kind of knowledge you claim to have, irrespective of how best your strategy has always been or how best your strategy is even in the present. If you're not patient, definitely you will get burnt and you will pay dearly for it with your ad-in um, resources. So the next thing is getting started, how to open an account. You sign up with a reputable FX broker, just like I think I suggested Deriv. And the reason why I suggested Deriv is that even if you decide to be trading currency and commodity, you can also trade that right on your Deriv. Can, in fact, right on the same account that you use for your synthetic, you can also add pairs, other pairs, and you can trade them. So you can trade currency, commodity, and synthetic on the same MT5 account, right in the same brokerage account, right? So you fund the account that is after you've mastered the act using the demo account, and also you choose your own platform, which is MT5. So lastly, you need to understand before we move to the practical sessions, you need to understand that the forex market involves or carries a certain level of risk. And you need to understand the market and be able to manage your risk exposure. I've seen people and I've heard of cases of people that after they lost, in fact, there was one that after he lost from gold, I think that should be 2016 or so or 17, the guy actually quitted completely. He called it a quit completely in trading, never traded until um and this year he didn't even go back into forex trading. He continued, and those people that he was working with as at that time were people like RBFX. This is someone that I know who would have become someone like RBFS if he hadn't given up. You've heard people like Jeffrey Benson said they lost over, is he $200,000 or so, one of his highest losses while he was starting off. And that wasn't even his money per se. So this carries a level of risk. And that is why you need to understand that right now as you are starting. And that is the more reason you need to pay attention to every single thing that I've shared earlier, especially that was why I took more time when I came to the risk management. Because if you want to stay longer in this space, you must be able to manage your your risk very well and your profit appetite. Because some persons, after even making more than 50% in a single day, they still say they must continue trading that same day, which is not wise. In fact, if you've made up to 10% in that day, if the market doesn't go to another maybe multiplied zone entirely within the same minute of period, I will be showing us that when we come right to that. subsequently as well. So you can end up blowing off all your accounts. Many people have ended up killing themselves, taking their own lives because they couldn't manage their risk exposure. Some of them couldn't afford losing also. When they lost all, it was either some of them gave up completely, or some of them just ended up taking their own lives, which is not a wise thing to do. So that's the essence of these lessons. So in our next section, we'll be looking at a profitable, how to be profitable trading synthetic like volatility pairs, boom, and crash. But right now, since we said we're going to start with a little practical, we're going to go right now